We're going to get at least one state that signs legislation in the next while. We're talking to numerous states right now. There's efforts going on in at least 10. I came up with an $813,000 price for Bitcoin. The economic model gives a first estimate of where that supply shock comes. And I don't see it really fully kicking in until we get down to a 1 million Bitcoin liquid supply. But if we hit supply shock, the price is going to go astronomical. It will go like 5 million or 10 million or more than that before it even starts to slow down. We're increasingly going into a more volatile region of price discovery, not a less volatile one. I don't believe that we're going into era of diminishing returns. I think we're going to go the other direction. If you're looking on a 3 to 5 year time horizon, say, that your expected value should be including $5 and $10 million options for Bitcoin.
You are one of the few doctors that I have on my show. I think like academia is not as as into Bitcoin as we wanted to have them.
Yeah, unfortunately not yet, but that is definitely something that needs to come, and I'm sure it will come. Academics are a pretty mercenary lot sometimes. They go where the research money is, and that will come eventually.
Yeah, absolutely. So you're thinking that the research money is basically kind of preventing, or is like a hurdle that a lot of academia is coming into Bitcoin?
Yeah, I think so. I mean, when you look at it, there's certain disciplines that people are more, able to do what they want to, like their own specific research areas. But if you're looking sort of at the big energy, environment, financial intersection, that interface, that's going to be really, really important for Bitcoin. Those are big research programs, so it takes a while to get the research. The donors need to get familiar with the concept that Bitcoin might not be as bad as everyone has been led to believe in the academic space. And then once there's research money that starts to flow into the space, that will really impact the dynamics of what happens and how things progress. But especially for the big team research, which is really common, especially like over in Europe, the Horizon research programs, to be able to get to a stage there where it's the donors are very prescriptive about what type of research needs to be done. It will take a while to get there for Bitcoin.
And you did research previous a lot on environmental stuff. What did you research there, and how did you then end up with with coming to Bitcoin?
I had sort of a strange background from an academic perspective. I dropped out of university 3 times along the way and got distracted and off in tangents by things. But I have a technical diploma in aquaculture and fisheries. So I spent about a decade in aquaculture, both here in Canada, where I'm based on the West Coast now, and also overseas in Southeast Asia. And then when I was in that, I got really interested in agricultural economics because there were so many of the problems when you're out actually doing farming. There's a lot of the things that you need to make decisions about that it's really interesting from an academic economic perspective. So I went back to school and did undergrad and master's degrees in agricultural economics and really got introduced to environmental economics at that time. And then when I did my PhD, it was very much an environmental focus going through. I was actually working on my PhD dissertation was on reef fish conservation in the Caribbean. I spent time down on the Turks and Caicos Islands working and doing research at the same time.
I love that. Maybe let's just directly jump in with that. How does I think Bitcoin, but probably Bitcoin mining in specific, what does Bitcoin mining contribute for the environment? What can Bitcoin mining do for the environmental science in general?
Yeah, well, I think everybody in the space is probably pretty familiar with it, but many people outside the space are completely surprised by what Bitcoin can do. And the idea that any energy source can be used for Bitcoin, whether it's remote, whether it's like a waste gas site, whether it's a landfill site, any type of energy that's available can be used for Bitcoin. And the typical reaction might be from people unfamiliar with Bitcoin mining is that, well, that's a danger. I mean, we see more and more energy being allocated to Bitcoin, but what it does is it really helps improve the economics of renewable energy, and it improves the economics of waste cleanup. And so there's lots of different areas that have potential for using energy that's completely not used right now, and directing it towards an activity that can help monetize and support different types of facilities. And for example, in that, we did some work at Satoshi Action with, in combination or in conjunction with the people from Nodal Energy, and they have landfill gas sites down in Utah and New Mexico. So we did an economic study on basically how economically viable and what sort of costs could be covered by landfill mining. So something like landfill, it has to be done anyway. And whether or not like a Bitcoin mine is purely profitable from a business perspective, that's kind of like marginal with some of the sites. But certainly for landfills, being able to put Bitcoin miners in helps recover costs, because you can sell Bitcoin into a global 24/7 market. That helps offset the costs, and ultimately that should reduce the tax burden for local citizens in the area. And so there's the whole waste energy sphere is one area. And then from a renewable energy perspective, it's certainly the case that Bitcoin can improve the economics of renewable energy, and whether that's hydro power or wind, and particularly wind and solar that are highly variable. We can use Bitcoin mining to come in and take up the excess energy that's being produced. Say solar energy, typically you get different demand peaks during the day, and so a lot of your solar comes mid-morning, sort of to noon, early afternoon, when demand typically isn't that high. That energy can be fed into Bitcoin, help offset the costs for running the solar facility. Wind is the same thing. What happens if your wind blows at night and you can't store it? Right now, battery storage is typically, you might get up to 4 hours. It will help in the evening, but it won't, like, it's not a complete solution. So Bitcoin mining during the night can generate money for different types of renewable energy operations. That helps offset their costs. By offsetting their costs, that means that renewable energy producers can expand the scope of their operations and contribute to increasing the level of renewables in a grid or within a country.
There's so many interesting things in there. It's also like I heard even about a project on an apartment building where there's a Bitcoin mining facility in the basement, and they are helping reducing the cost of electricity for that apartment building with that Bitcoin mining facility. That's just so many different great use cases for that.
Yeah, and it's really interesting to start to think about waste heat as a resource. And I failed my first year university chemistry course and thought I'd never worked with chemists, but it ends up over my career I've worked a lot with environmental chemists. And so they talk about valorization of waste product streams, and which just is a fancy way of saying that, for chemical waste, there's ways to extract some of the valuable chemicals and use them in other applications. And in many ways, the waste heat is like the Bitcoin mining streams. That's what needs to be valorized or commoditized or monetized. Waste heat as a product, there's farms that are using Bitcoin miners for basically biodigesting manure, and then using that energy for Bitcoin mining, and then some of the waste heat from that operation goes back into keeping their facilities warm. So there's options like that. There's options with landfill sites to help generate local heat for industry or for residential district heating. And there's also, if you go to developing countries, there's all sorts of opportunities for using Bitcoin to help to finance local electricity grids, maybe hydroelectric, I think is primarily the option right now. But by having the miners there as the core customer, they can up the electricity production from local hydro facilities that were going underutilized. So that energy, the electricity that's generated from that energy, can then be passed off to the communities basically free of charge, and help to electrify communities that are don't have electrical connections currently. So that's a whole step change for social benefits as well.
Interesting. I love that. And there's so many great applications in there. And why do you think there's still so many voices out there that say, oh, Bitcoin is bad for the environment, it uses too much energy, all those things? It seems to be last year that those voices got more and more silent, and I don't hear it that often, but they're still out there.
Yeah, they're still out there. I mean, a lot of it is that people don't take things seriously. And, the academic writing that I've done, I view that the main goal of that is to really educate people in the academic space. That's who my audience is for most of the writing that I do. And so I tend to write for a fairly interdisciplinary crowd that, and with the goal of just like really trying to open the eyes up that, hey, this maybe isn't exactly what you thought. That there are all these potential benefits, and yes, it's energy intensive, but we have all these. There's just so many considerations that come in at the same time that you have to consider if you're looking at the big picture. You have to consider the waste energy. You have to consider the impact on the scope of different types of energy use, the expansion of renewables. Also, potentially, which could be viewed on the negative side, you might make existing oil and gas facilities more economically viable. Of course, by monetizing waste gas, which some people would view as a negative. But you also need to think, for academics, I think you need to be looking at the big picture and thinking, well, what's the status quo situation? When in policy research, we always like to consider a status quo situation versus an alternative, a case where you're doing something. So we bring in the Bitcoin miners and install Bitcoin mining on a widespread basis. What's the valid comparison? Should we be comparing to an energy future where we like cap our energy use totally, or the financial system? Do we look at how much energy the current financial system uses versus the potential alternatives? What are the substitution effects in there with Bitcoin? So there's all sorts of really complex questions that are out there that need to be answered. And anybody that blows off the questions like too quickly probably just hasn't even taken a look at Bitcoin, and they're negative on it for whatever historical reason or personal bias, or in some cases just a lack of time. They just like chalk it up to spam and don't think about it. So it really, there's this huge awareness building process that's needed within the academic space, I think.
There's like a time that's needed to educate people. Is that where your main focus with the Satoshi Action education is going towards researching environmental and also economic stuff and putting it out there for the academics also?
Yeah, like my end is with Satoshi Action. So but technically I'm part-time, but functionally I'm full-time. And I've been connected with Dennis Porter like over 2 years ago now. So I've been working with him and Satoshi Action ever since. So there's two roles, and one is on the academic research side to try to help facilitate getting research out, whether it's our own or whether it's other research. We'd like to see more researchers out in the space. That's very important because we can get into it later on if you want, but there's a whole world of editors and reviewers that need to be dealt with in the academic space. And the more people we have publishing on Bitcoin that understand Bitcoin, the better that side of it is. But besides the research, there's also, I do support, I do research support for the lobbying efforts. So we have separate organizations for education and for lobbying. But for instance, like the landfill methane paper that I mentioned before, it really was something that could contribute to education and awareness building on the state side with energy organizations. And then now in the last while, with all our focus on the strategic reserve funds at the state level, I've been doing a lot. The last couple of months have been really busy with straight economics research. So right now, for instance, I'm just wrapping up a study where I looked at the 50 states in the US and did a counterfactual study. So we said, what would have happened if all the states, each of the U.S. states apparently has a rainy day fund, like sort of and for emergency drawdowns or unforeseen circumstances. And so what I did in that was I looked back to the start of 2018, and what would have happened if the rainy day funds for each state had invested in a combination of Bitcoin and gold. What combinations could have kept ahead of inflation and maintained purchasing power? And so we had yesterday, there was hearings in North Dakota and New Hampshire that Satoshi Action people were out at. And so the work that I do is partly it's not so much about educating academics in that case. I'm preparing materials that can help to educate the state people, the policy shop analysts, as well as the legislators that Dennis and Eric Peterson, our policy director, are working with.
So it's about providing the evidence that Bitcoin would be an amazing decision also on a state and national level for them to use economically.
Yeah. And it was really interesting because the states, their rainy day funds will go up or down. They only publish their stats annually. So I had to sort of like manipulate that and bring it back into divvy it up on a daily basis. So, but yeah, it was fascinating because what happened was that some states, like in this counterfactual analysis, it's like some states you looked at it, and the states, the way their rainy day fund draws went up and down. They would have been total like FOMO investors. They would be buying the peaks and then selling the troughs. And so the performance was always better than the alternative. And I used for a status quo scenario, I used overnight funds, so basically a proxy for treasuries. And so the idea was that states could either put all their 100% of their funds into treasuries, or they could put up to 10% into Bitcoin and 10% into gold in various combinations. And every one of those combinations, whether it was 1% gold and 0% Bitcoin, or 10% Bitcoin and 0% gold, every one of them gave better performance than the status quo scenario. So right off the bat, like a lot of people are concerned, obviously, with Bitcoin's volatility, that maybe it's a bad investment. But we were able to go through and really show and demonstrate that over that time period, having Bitcoin was really a big positive for portfolios. There were some times that it drew down, it was a negative performer, but our analysis started January 1st, 2018. Of course, that was the start of the big bear market for 2018-19. And so you couldn't have picked like a worse place to start from a market timing perspective. But everything was up, and in some cases, we had a few states that if they would have invested, they would have actually been like very prudent investors. They would have been buying the bear markets and then either holding steady or selling during the bull phases. And even with a 10% Bitcoin allocation, like they could have had rainy day funds that were up as high as 90% in one case over a 7-year time frame. So that's like really substantial. That might be too risky for state investors, but like certainly 2, 3, 5% level of investment in Bitcoin is something that, when you look at the historical performance in this counterfactual, it's something that looks pretty attractive.
That's an political argument that's massive when you think about a 10% Bitcoin allocation, and with that almost doubling the rainy day fund. That seems to be, and that's 7 years. It's not like 100 years or something like that.
Yeah, it's really interesting. Like, and this paper that I'm working on right now, like literally, I just finished the analysis like 2 days ago, and so I'm writing right now, and hopefully we'll have a draft paper out maybe later next week, but certainly sometime this month. And yeah, it was really interesting. And what I found really interesting, and it was looking at the say like so if you imagine that if you wanted to say, okay, what do we need to do to maintain purchasing power, and there was various combinations, and the reason we included gold was because a lot of the state legislators and the state legislation already allows for precious metals to be held within invested in within rainy day funds. So we're sort of trying to align Bitcoin with the existing uh, um, legislation when possible. So there's interest also in gold, maybe works as a bit of a hedge on drawdowns. So one of the findings was that like we could go to like if we went to 1% Bitcoin allocation and in combination with that 9% gold would basically offset the effects of CPI inflation. Doesn't cover debasement, but it covers inflation. And then when you go to a 2% Bitcoin allocation, you only need 2% gold. And then when you go to 3% Bitcoin allocation, you don't need any gold at all. So if I was a state rainy day fund manager, I'd be looking at those scenarios where it's 96% treasuries and 2% gold and 2% Bitcoin, or 97% treasuries and zero gold and 3% Bitcoin, and thinking, wow, if I can preserve my purchasing power with just like a 2 to 3% or a 3 to 4% allocation of my funds away from treasuries, that would certainly be something that would be grabbing my attention.
And especially like 3%, even like it's not as risky. Like if you have 3% and it's that 3% maybe has a volatility of, let's say, 20%, even 30%, which would be high in like a few months or something like that.
Yeah.
You don't even really see it like that. That does not even function, like, because the maximum volatility is then 3%. It's not that big of a deal.
Yeah, it's not that big of a deal. So that's interesting. The other thing that was interesting in it too was I just looked at for a baseline, like what happens if a state put money in and they did nothing, like they didn't even invest in treasuries, and I was actually pretty shocked, but it was like a 30% devaluation over 7 years. 30% ballpark. It wasn't, it might have been a little bit less than that, but it was a really substantial loss in purchasing power for if you would have had any type of investment, or sorry, not investment. If you would have just basically had your cash allocation made on January 1st and just left it and done absolutely nothing with it, you'd be down like, almost 30%.
Yeah, and 30% for a rainy day fund, where, like, I don't know, do you know what on an average there, how much money there is in there? Is it like a few hundred millions or?
No, you're looking usually higher, more than that. You're looking maybe typically somewhere between $500 million and about $4 billion.
Wow. So like if you have like $1 billion in there and you lose 30%, then that's like 300 million that you lose in purchasing power.
Yeah. And so even, and then if you're all treasuries, you're not, you're saving some of that, but you're not getting up. Even if you were all treasuries over that 7 year period, you wouldn't, you'd still be losing purchasing power. And so from an education perspective and an awareness building perspective, that's what we were able to show using this background research. And that's a very powerful message when you start to go and you talk to state people and say, look at, you could go 100% treasuries and be really safe, but you're losing purchasing power. Your rainy day fund is being eroded away, even as it is. And then, but if you allocate, say 1% to gold and 2 or 3% to Bitcoin, very conservative still, then you're at least at a minimum going to be able to preserve your purchasing power. And so that's the sort of message that really resonates with the state people.
And that is an amazing message of like, okay, you're losing in 7 years that 300 million if you have $1 billion in a rainy day fund, but only with like a 3% risk, which I
Mm.
don't see as a risk, but they probably see it as a risk Bitcoin asset, you can completely offset that. And the risk is really minimal because it's just 3%. That's an amazing story. I love that.
Yeah, no, of course, the obvious next step would be go and include debasement in there too. So I have to think a bit about how that would be handled. Like doing CPI inflation is really easy because all the stats are there. Um, maybe you could use M2 money supply as a proxy and then calculate. I mean, the numbers that are sort of thrown around in the Bitcoin space is that if CPI inflation is 3%, maybe your debasement is maybe twice that much, like 6% or so. And if you're getting up, if you could if we could demonstrate that debasement was like 5 or 6% plus your CPI inflation, and then all of a sudden, then that really, really erodes your purchasing power even quicker, and that would be what would help justify, maybe a 5% allocation into Bitcoin or even higher than that. So that remains. Well, I'm not sure if I'll go ahead and continue with that. There's many different things sort of on the plate right now that are being juggled around, but I think that's in this sort of stream of research that we're doing, that's the next logical question.
That's also super interesting. The weaker the currency gets, the faster it debases, the higher you have to put the Bitcoin allocation in, because you have to offset that. Of course, if you have just minimal inflation, you don't need a lot to offset that. If you have a high inflation, you need more to offset that.
Yeah.
I mean, obviously, inflation, as many know, is an subjective metric. Like everyone has his personal inflation rate, depending on what you do. If you want this house on the lake or on the beachfront property, you want to eat in great restaurants and stuff like that, your inflation rate is way higher than the average. If you just live at your mom's basement and watch Netflix all day, the inflation rate, maybe it's even like deflationary your life. What do you think is the best metric to kind of keep track of inflation? Because CPI seems very low for me.
Yeah, I mean, this, like, I'll qualify by saying that, like, this type of financial economics is not my area. So, like, there's things in here that I don't like fully understand yet, and there's things that I wouldn't be able to crank off an answer for. But if you look at other like hard assets, you look at real estate. What's real estate done, like in the United States and in Europe and in Canada? What have real estate prices done over the past 7 years? And like I know in my local listings, I mean, I'm seeing places here in Vancouver Island that are up like, oh, geez, like I saw something yesterday that was an 8x increase over the last 10 years. And sort of like that's just for real estate, that's a huge amount to go up. So I would sort of think that maybe like tracking a real estate index would be a good proxy for debasement, or debasement and inflation combined. I'm not really sure about that. That'd be something else to be worked out. But I think that something along that line would probably be a better, like a potential substitute for debasement. And I'd have to look out into the existing literature on it, though. I know lots of people in Bitcoin certainly have their opinions about what debasement rates actually are. I'm not sure. Sometimes I go out into the financial economics literature and I think, oh well, let's find something that there's a really easy answer to, and then I find out that really there's not an easy answer to it, and which is unfortunate.
We like easy answers, but most of the times it's harder as it seems.
Well, sort of related to that, like I've got another paper that I'm working on with some Bitcoin academics. Actually, it's on hold right now. It's about time preferences, and so my career has been in the environmental space in academics. So like I've been really exposed to this whole the very left leaning. I mean, I taught climate policy economics before. I've taught it for years, and within the environmental space, there's this there's this idea that you, well, there's not, sorry, let me start that again. Within the environmental space, time preferences are super important, but they're not recognized as such. So one of the things that with this time preference paper that we're working on, I like, my presumption was that like left-leaning sort of socialist or left-leaning governments would be more prone to spend money on mitigation than right-leaning governments. And so I made some comments in this paper when I did the draft about how it was, I assume that, your left-leaning governments are going to be, like, I just took it as an assumption or a given that the left-leaning governments would be more willing to spend on mitigation, upfront mitigation. So spend now to prevent climate change later. And I thought, well, that would be an easy thing to go out into the academic literature and prove. And it turns out that there's not really any clear answer out about which way your political leaning of a government actually affects inflation. You can't go out and say a right-leaning government is less likely to cause inflation than a left-leaning government. So that was a surprise to me.
I mean, yeah, it's like, but once you're in power, you want to spend money, and they're usually debating on what to spend money on, but they're usually not debating if they spend money.
Yeah. And now, you look to the US and to the Trump administration coming in, and there's inflation fears. And, it's like, well, if they're look at inflation over the past, 8 years or 12 years, however, really back to the Clinton government was maybe the last time that inflation was sort of under control. But yeah, there's certainly no guarantee that there's going to be a more frugal government that combats inflation coming up, no matter what the political stripe is. But back to the climate change argument. So in the climate change space, you can either mitigate climate change, so that's investing now to prevent climate change off in the future, or you can basically let things slide right now and invest in other things to increase your adaptive capacity. So if and when climate change becomes a problem, your society is better able to adapt. So you can invest in health and education and all sorts of other things with the knowledge that empirically that those factors really help people over the longer term cope with stress. Now, of course, the problem in the climate change space is that, well, what happens if we hit tipping points? And so there's this constant argument in the climate policy world about, what's the proper balance between mitigation and adaptation. And that all depends on time preferences. And so it's fascinating to me that, there's this Bitcoin world which is heavily influenced by Austrian economics, where time preferences are very important. And all of a sudden, time preference, like everybody in the Bitcoin space talks about time preferences. And it's like nobody in any other space talks about time preferences. Like you have to go through, and it's the whole education process. Anybody out in academics outside that particular area or that particular niche in economics really don't understand time preferences and discount rates at all. So it's really, and Bitcoin's an interesting space from that perspective.
I partnered up with Coin Vigilante. This is the most beautiful Bitcoin timepiece that I ever saw created by anyone. Look at that beauty. I love it so much. Coin Vigilante made a perfect Bitcoin watch. That's the perfect, subtle, elegant way to go out there and show that you are a Bitcoiner. And that watch brand is Bitcoin only. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece, and make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. If you watch or listen to my podcast on a regular basis, I guess you already bought some Bitcoin. And now the most important step is to keep their Bitcoin. Keep them secure in a hardware wallet. My personal recommendation for hardware wallet is the BitBox. It's super secure. It's simple to set up. It's also a perfect gift for a friend who has still their Bitcoin on an exchange. And you can get a 5% discount with the code Robin at the checkout. Visit bitbox.swiss/Robin to get your BitBox. And the next step is to really level up your sovereignty as an individual. You have to have the most secure self-custody setup. You have to secure your own devices. You have to protect your privacy. You have to set up an inheritance plan. And depending on where you live, you even want to have a plan B, a citizenship where you can move in case something goes really, really wrong. And through all those steps, the Bitcoin way is guiding you through step by step. And if you visit thebitcoinway.com/partners/Robin, you even get a 30-minute free call to find out how you can level up your sovereignty. Absolutely, yeah. And the political thing is also interesting. Just to add here, I think especially Trump wants to have lower interest rates, and especially in his first term, he was always a proponent of that. And lower interest rates make the dollar weaker, but there is no metric for that. People don't value if the dollar is weaker or higher. They value inflation rates, but they are not that big of a problem as long as the US dollar is the world reserve currency. And the stock prices go up, and that's kind of like, stock prices go up, so the economy must be great.
Yeah.
and then the president has done a great job. So I don't know, that system seems to be a little bit off, but maybe we see a lot of Bitcoin things in the next term. Let's see what happens.
Yeah. The thing that has always confused me about the government, particularly the last Trump administration, is that I view interest rates as a function of uncertainty. Like there's a certain view within economics. It's like discount rates, in particular, discount rates and time preferences are a function of how uncertain your environment is. So if you have a highly uncertain environment, you're not looking far forward, and you're also not using much of the information from like the more distant past. And think of ultimately like life during wartime. Your time. There's the telescoping of time is one way that it's being described. So as your uncertainty in the world goes up, your time, your telescope, or the range of the past and the future that you consider actually falls down. So in wartime, that can be down to hours or days. And if you have high discount rates, which are not necessarily, they're not reflected in market interest rates, but over the long term, it doesn't seem that they can diverge over a very long term. But if you have a lot of uncertainty, that implies high discount rates. And if you have much more economic certainty, which is part of the Bitcoin argument, that you have a much longer time horizon, that implies lower discount rates. But, for a government to come in, like the Trump administration last term, seemed to just thrive on chaos. And, we look at what's going to be happening as far as government efficiency. There's going to be a lot of changes coming in the US that have important international implications. And to me, high uncertainty. We also have the technological change that's just galloping along right now. And so there's all this uncertainty, and that doesn't, that implies high discount rates. It doesn't imply low discount rates. So there's this whole sphere out there, and this is an area, again, academic research there's a lot of academic minds that could probably really help thinking this out over the longer term, how these dynamics interact. What's the interaction between Bitcoin's, pushing out the time horizon and lowering the discount rate versus technological advance, pulling the uncertainty or increasing the uncertainty and pulling the discount rates the other direction. So, it's just a huge number of challenges in the area. So I think this could keep economists going for, the next decade, probably, in different research projects to try to figure out what exactly the relationships are. I don't think it's as simple as what we often think about in much of the Bitcoin space.
Absolutely. What also is interesting for me, we had a really quick development in the last 4 years of Bitcoin adoption in corporations. MicroStrategy basically kicked it off in 2020 with the first publicly traded company. Now it gets more and more popular. We see like MetaPlanet, Semler Scientific, and like hundreds of other great publicly traded companies that do that strategy more or less, and especially in the private sector also more. And now we might see 2025 the real kickoff of like nation state adoption, where Dennis Porter makes great. Oh wait, now is I think a good time to show this quickly, because we talked about Satoshi Action and about Dennis Porter. I just want to show this to people if they're interested in the other side of also Satoshi Action. We talked about actually with Dennis Porter not that long ago, 2 months ago, about the whole thing also on his side. It's super interesting, and maybe it might be an interesting combination to that podcast also. But what will change when more and more corporations, more and more individuals, and more nation states also adopt now Bitcoin as a primary reserve asset on the balance sheet? What impact do you think will that have?
Yeah, well, I think you were maybe on the Spaces where we were talking about the price forecasting paper that and model that I did, which is how you connected it originally. And my my interest on the adoption side is how that impacts how the supply and demand dynamics impact the price projections going forward. And so that's really what I'm trying to figure out, and trying to figure out what exactly and when there might be a supply crunch and or a supply shock coming down the road. And more broadly, and this is something I've sketched out, but I haven't worked on. What happens if there is like a really hyperbolic price increase in Bitcoin, and what does that imply for society? I think there's some really, I don't think the implications are thought out right now at all. And there are some positive scenarios, but there's also some very negative scenarios, I think, that are possible. So that's something that I'm just starting to work on right now. And it probably won't, it'll be like a part-time project that I keep on maybe over the balance of this year. But I would really like to figure out, first of all, what are the probabilities for like really, really substantial price increases and during a supply shock, and what are the social and economic and governance implications of those down the road?
That's super interesting, especially the question of like first of all, like I was really disappointed with the 100K reactions from outside of Bitcoin. Obviously, within Bitcoin, we celebrated. There was like 100K parties all over the world. There was a lot of celebrations, and we like celebrated it. But I thought actually that it will be less of a big deal within the Bitcoin community and more of a big deal outside of the Bitcoin community. I was totally wrong with that one, because nobody really seemed to care. Obviously, some friends were like, "Oh yeah, you're doing good now in Bitcoin, right? It hit 100K," but it didn't spark an interest in them. And also, if you see metrics like Google Trends, I love to see Google Trends. If you compare that to 2017, it was just like a small spike. We're like at 50% of the levels of 2017, and we are now so much bigger than 2017. It's crazy for me how that 100K didn't do anything more.
Yeah, and maybe it's just a reflection that retail isn't like the most important sector anymore like it used to be. And like you were saying, I mean, there's so many corporations are adopting, nation states probably already like stacking, and probably more to come in state level. For Dennis is certainly, he's very certain that we're going to get at least one state that signs legislation in the next while. And like things are looking, we're talking to numerous states right now. There's efforts going on in well, I don't know if I should say how many, but like at least 10. I think that's been what they've Dennis and Eric have been saying publicly. So we're seeing all this happening, and Yeah, maybe retail FOMO, maybe it won't hit till it's a million, who knows, or 300, 400,000, where we get like really up into these areas that it becomes like a really substantial impact, where people that used to be able to have the opportunity to buy Bitcoin at $40,000 or $25,000 or $10,000 really look and really realize what the opportunity cost of not investing was.
Absolutely. I just want to show this to people because I wanted to see if it's actually 50%. It's actually right around 46% of what we had 2017 with this huge bull run. And we're not even close to what we had in 2021. So this tells me kind of like this bull run is kind of driven by corporations and by institutions and by ETFs and less by retail. Retail seems to be not as important. And I talked with Roger Sonia on that of like, that we think that even at like a million, most people will be still let's say ignorant to this asset and will still be like, okay, Bitcoin. Only slowly if the price goes to a million and above that number, where it really wakes people up, and 90% and maybe 80% are still asleep to Bitcoin. I mean, depending on what metrics you're looking at.
Yeah, and like a lot of people will probably be similar to what, like, my experience or probably your experience. A lot of people in the Bitcoin space, it takes like 2 or 3 takes on it to really like have it click. And that didn't happen. I saw Bitcoin back in 2010, like in the Bitcoin faucet days, where you could get five free Bitcoin just for giving your address, which I thought was an email address, and I wasn't going to give out my email address and get spam email, so I passed on that. But yeah, and then like 2015, I saw Bitcoin again came up. I've done one of my areas in academics was and it's still horizon scanning. So what are the new emerging issues? And Bitcoin had actually been picked up as a positive in 2015 on a biodiversity horizon scan, and for its ability to sop up waste energy. Unfortunately, all the DeVries stuff in the Mora et al. Papers came out after, but the first time it came to our radar in academics, it was actually a positive. And so I looked at it then, and then I tried to buy so one of the things I won't do is, like, I've traded a lot. Like, I've been options trading like since forever, and like 35 years, and I won't chase prices. I'm pretty disciplined on investments, and so I won't chase prices, and I'll sell if I hit a certain price level on the way down, and so I wouldn't chase. Like, I watched Bitcoin go through the 2017, 2018, whatever the bull run in that time range. And I wouldn't pay the price. And then it fell back down. It was down at $3,000. And I was looking at it. I tried to open an account, couldn't get an account opened. I was going to have to do some sort of peer-to-peer transfer with somebody in St. Petersburg, Russia. And that wasn't going to happen. And I was living in southern Sweden, in Malmö at that time. So there's a Bitcoin ATM across the way in Copenhagen, but they were charging like a 30% premium on for buying through an ATM. And I said, like, my economist side coming out, I'm not going to pay a 30% premium. So I could have had Bitcoin for $3,900 instead of $300 or $3,000. And like, that didn't happen. So I didn't end up buying Bitcoin until after after it came down in price, after the 2019, 2020 price spike. And, if you think of that, other people might like sort of have that similar, maybe they'll be smarter and have like an Excel, they'll be able to compress their time scale of, it wasn't skepticism for me. It was just indifference or just not understanding it. But I think, if we look out into the retail world, there's probably a lot of people that, like, it's the same sort of thing. They maybe have to encounter it like multiple times, and they somehow has to be validated through friends or through family or through investment advisors that this is actually a legitimate thing. And on the investment advisor side, I mean, that's just starting now. You have a lot of Bitcoin meetups that are starting, but you're only covering just a tiny, tiny fraction of the people out there. And I just, I just think it's going to take time for people.
Yeah, and it definitely is accelerating. I had already one person on, not that many, but one person on that it was Orange Pill in 2024, so fairly recently. And I saw that she was just in Bitcoin for around 5 months, and she was so far down the rabbit hole. And I was like, wow, that's really, and that got me into thinking of like, okay, you just described of how you had to open an account and then it was not possible. Then you had to do peer transaction. Now in a small country with like 8 million people in Austria, or no, let's say the German speaking area, Austria, Germany, and Swiss, there are 5 Bitcoin only exchanges. Only here, only in the German speaking area that I know of. They make it super easy. They advertise for it. They give you really easy to use applications that are super integrated with the traditional banking apps here. Then there's a vast majority, a vast landscape of Bitcoin content creators, podcast hosts, speakers, conferences, all those things. Those were not there 2017, 2015, stuff like that. So I feel like the rails are there to have a fast onboarding.
Yeah. So maybe like in my case, it was like 10 years from like finding out about Bitcoin to purchasing. A lot of people, like it was maybe 3 years or 2 years at that time. They might have encountered it a few times and then like sort of clued into it a little bit earlier and rode some of those early bull markets up and back down again. Yeah, and it's easier. And certainly here in Canada, like it's much easier to access Bitcoin again. We have ATMs. I was just out for a walk yesterday in the small town I live in, and I saw a Bitcoin ATM that I hadn't seen before, and they're a bit more pricey than before, than buying out a exchange, but that's a possibility. And we have some really good exchanges now in Canada, Bitcoin only exchanges as well, so that's good.
I know of Bitcoin Bull, I know of from Canada, and they recently also started in Europe as far as I know. I'm not sure about that, but yeah, I think they started also here. But yeah, really cool. I think you said you're only in the beginning of your research, but what did you find out so far? Like what happens once we hit those price targets of like 500,000, a million, 10 million?
Yeah, well, I think that sort of the main message, I got a bit of grief from some of the power law people because I had made a comment in the working paper that I view power laws as descriptive, not as predictive, and that sort of raised the ire. You'll probably get some comments now that I said that again. But the reason I say that is, being an economist and being a particularly applied microeconomist, I'm always about supply and demand. I came from the agricultural field, so everything's about supply and demand. And I figure we don't know exactly where we are for liquid supply for Bitcoin because we have Bitcoin on exchanges, we have OTC desks, and plus we have like a lot of Bitcoin holders. A lot of people are assuming, it could be a lot of Bitcoin from the early holders is lost. I'm not so certain. You've probably met people. I've met people that, I met somebody randomly that was mining Bitcoin when it was $1. Excuse me. And, that person, I don't know how much Bitcoin they have, but when it was $1, I mean, you could have thousands of Bitcoin, and that's been sitting on hard drives in a closet for the last, like, however many years that is now, 15 years. And I suspect there might be more Bitcoin supply that we assume is lost that might come back out into the trade once prices get high enough. But at the same time, we have the nation states, we have corporations that are buying Bitcoin and taking supply off. So to me, the whole question about, price trajectories is really comes down in the next couple of years. I think it's all demand side that's going to drive it. And I don't, excuse me again. Actually, can we just break for a bit? I better get a glass of water.
Yeah. Or
you can edit this out.
Break. Yeah.
Sorry about that. I had coffee handy, but I had no water. You're muted.
Oh, sorry. I was just saying I always have water next to me because I have usually 2, sometimes 3 podcast recordings per day, either my podcast, other shows, guest appearances and stuff like that.
Yeah.
And I just need it for my throat, otherwise my throat is dying off.
Your work, you must have your workflow just nailed by now, eh?
Well, yes, I definitely have you are my 368 podcast guest. Wow. And it will be fun to see how it looks once I cross like 1,000 podcast guests and stuff like that, because I came now so quick in just a year to over 300, and I will come this year. This year will probably cross over 700. Yeah, I will cross this year already over 700. So 2096, I will cross the 1,000 guests. Yeah, it will be fun to see.
Yeah, we didn't talk about it, but like one of the things I'm doing on my own is summarizing YouTube podcasts, and that's part of my horizon scanning for Bitcoin. So basically going through every podcast and pulling out potential research questions and then prioritizing them. And I've got my workflow down to, I can summarize like a YouTube video now in about 10 minutes. So it's like, it's like the technology coming along. It's just so good. But anyway, that's
amazing.
Another matter.
Yeah, it goes so quick now. I used to need around 2 hours to prepare for a guest. Obviously, that's not working now because I do every day. Yeah. I need now between 10 and 20 minutes with all the AI tools that I have in place, and I just have give the name in there, and they're giving me already a lot. Then just some manual work in there, and it's just so quick, and it's better than when I used to spend 2 hours, because more information is in there, and they give it me in a better formatted way, and on one glance, it's amazing.
Yeah. I just upgraded to the OpenAI 01 and O1 Pro model, that $200 a month model. And it's that like now my content is coming through. I do light edits for style, and I've been doing briefing notes on a lot of the podcasts as well, although I've been a bit behind on that just because things have been so busy with Satoshi Action. But yeah, it's like the process 01 is, I find, so good that it's got my writing style, and it's got my and it gets the content. It just nails content every time. Just really rare that I have to even edit anything anymore.
I just see it now. I've never seen that before. How long are they having that on already? Because I'm a big ChatGPT fan. Like I use it for so much of my work, and I just see it for the first time ever that they even do that.
01? Yeah, it's been about I'm just coming up on my first full month with it, and it's super. Like for me, I thought $200, that's a lot of money. I know price will come down over time. But it just just as an example. So last year, YouTube videos, I have over 1,800 videos summarized from from 2024 calendar year, another 1,600 plus from 2023. And I used the OpenAI 01 Pro, which is slow, but I asked it to organize so every podcast, 20 research questions, and then 5 high priorities. So 1,800 times 5 questions. I asked OpenAI 01 Pro to organize that and to make sure that every research need that it identified was distinct, and to cluster all of these together, remove redundancies. And it was super interesting because you know how ChatGPT, it's like all it's function to like it's designed to work with people, and you know you're saying your thank yous, and it's like giving you banter type stuff. 01 Pro was the first time that I thought, holy shit, this is machine learning. Like it took this massive data set and just cranked through it, and it spat out like this organization that was just perfect. It would have taken me a year to do it, like manually. I've done these studies before, and it would have easily taken me a full year to work through what it did in 20 minutes.
Oh.
Yeah.
And it fascinates me how quick it is also finding its way in my life. I rarely Google anymore. If I have a
Yeah.
question, like for example, if I'm cooking something and I'm like, oh, like, how can I do it? Or
Yeah.
like, I messed something up. Is there some better way to do it? I just open ChatGPT with the voice mode. I'm like, hey, ChatGPT. And then I'm chatting with it. I know, oh yeah, that and that you can do. Or emails. I do now, I would say 80% of my emails with ChatGPT. It's
Yeah.
so good. It got my writing style down.
Yeah.
And I'm like, that's me. Like I would write that email like that.
Yeah.
And in like 10 seconds, it has that email. And I put a prompt in for like 30 seconds. And then I copy it and probably need like for the whole thing 1 minute. Otherwise I would need like, okay. Then I have to proofread and
Yeah.
stuff like that.
Yeah.
That's amazing.
Yeah, productivity is just like through the roof. Like it's just like for me, this is like as a university professor, a lot of times you have a group of PhD students that are working with you, and you'll put out like projects, then they'll get them working on projects together. But oh my God, like working with GPT, it's like the best editor that I've ever worked with, and it's like all for me like 24 hours a day, and it's like it's just amazing. Like the productivity level, if I was still working in academics, I typically would have published like 6 papers per year with various co-authors, and now I could easily see if I had a full group of PhDs and a postdoc or two, I mean, we'd be cranking out like 30 papers a year probably.
Yeah, it's the same with the podcast. I couldn't do this podcast as I do it right now without AI, because I need the AI to do the post production. Because especially I have like a trailer in front of like I have clips and stuff like that. In that quality, I couldn't do the podcast in that quality and quantity without AI. Not even close. Now I'm getting to my first employee, so now let's see what's possible. But till now, it was possible just with the AI employee that I had. But coming back to Bitcoin, I think you were talking about the paper, the research that you are currently doing.
Yeah. The supply shock side we were talking about. So my question. So over the next few years, I see demand is really driving Bitcoin price increases, and I think that could be really substantial. If we get up to market cap of gold, I've heard various people talking to $800,000 range, and I personally, I was skeptical of that, but then when I did the economic modeling, I came up with an $813,000 price for for the gold market cap if Bitcoin got up to that. So the modeling actually helped me be less skeptical about price increases. On the supply side, though, the big question is supply taken off out of the market permanently? And for a lot of the reserves, I mean, the state reserves, you're talking about sometimes 10, sometimes 20-year time horizons before they're even allowed to sell it. I don't know what will happen with the National Reserve if the U.S. goes ahead with that and what the implications there are. Corporates, I mean, Michael Saylor's talking about permanently holding those. And as we go into a world where we can take loans out against Bitcoin, where there's derivative products that maybe we can use to generate income, like selling covered calls, or different types of option strategies where we don't need to sell Bitcoin. My feeling is that we're going to see a lot of Bitcoin that doesn't move and that will actually get to supply shock. And so what the economic model did was it really gives a first estimate of where that supply shock comes. And I don't see it really fully kicking in until we get down to a 1 million Bitcoin liquid supply. And even with some large scale institutional buying, I don't see that for like another 2 or 3 years. But when it hits, that's when, back to what I had said about the power law being descriptive rather than predictive. The way I like to think about things is, okay, what combinations of supply and demand would lead to a power law price trajectory. And to me, that's all based on the demand side. So it's expanding demand. And as we go through the typical S curve for technological innovations, adoption, and that typically would lead to like a power law relationship. And when I look at it, though, when we take account of the supply shock side of things, if we hit supply shock, and if depending on how many OGs come up with extra Bitcoin out of their closet hard drives and, from wherever, some of that will come back onto the market. Maybe that will slow down the supply shock. But if we hit supply shock, the price is going to go astronomical. Like it's just going to it will go like 5 million or 10 million or more than that before it even starts to slow down. And I don't know. Yeah, I don't understand the derivatives market. You've had other guests that really understand derivatives, like really thoroughly. And I think part of the future is we actually want a future where Bitcoin's price, I think my view is that we want a future where Bitcoin's price can be controlled, that it doesn't go up like in a straight hyperbolic, just out to the moon and beyond, just because of some of the social impacts it could have. And maybe the derivatives, maybe a really robust, a derivatives market can help, sort of curtail that upper end of it. And maybe at some time the reserves will also be able to strategically sell off, small portions, or maybe there's opportunities for international cooperation to form an international strategic reserve where if prices really start to go, fully ballistic, that, there will be some sort of bleed out of existing supply back into the liquid market. So I don't know how any of that's going to be handled. I don't know if people are really thinking about that or who's thinking about that right now. Right now, the focus just seems to be on price going up.
How high has the Bitcoin price to go for it to really have negative impacts on society?
Well, I don't, the way that I've started to think about this is like I've tried to think about, well, what axes could you describe Bitcoin on globally? And so you could have a world in which there's, mainly institutional adoption versus mainly regional, or retail and regional. So there's a global versus regional world. There's a world that's in conflict where there's a world that's relatively stable. And there's a bunch of these different axes. There's maybe 5 or 6 of them that are major axes. And, again, going back to research world, one of the things that is done in say for climate change policy, there's all these scenarios that have been built out. And so they have representative scenarios that are used in all their modeling. And so you can go in and specify, each of these scenarios has a number. You can go in and specify the scenario that you're using for your modeling. And then you can look and see what happens to climate change under certain assumptions about fossil fuel use over time, just as an example. Now, in the Bitcoin world, I could see something similar happening where we have sort of a baseline scenario that, we have some sort of certain price trajectory, and we make assumptions, and then we make assumptions about what these other, is Bitcoin going to be globally adopted? Is it going to be regionally adopted? Is it going to be primarily an institutional game or a mix of institutional retail? Is there a strong derivatives market? Is there relatively, it's more sort of your exchange traded products and maybe coins on exchange and different sorts of things where you don't get that depth of the derivatives market. And I think if you combine, you say, okay, what happens if we have a scenario where it's global, but there's like high level of conflict and it's institutional and there's a lot of derivatives trading, maybe it will be stable. But what happens if we have like conflict and then geopolitically there's it's quite divided? That might be another scenario. So this is a very poor explanation, but it's the way I'm starting to try to think about this is so what are the potential Bitcoin worlds that we could land in based on these different trajectories? And I think that there's all sorts of trajectories where it ends up where Bitcoin ends up being like a sort of strategically hoarded, either at the international, like at the nation state level, or even at the regional level, where it becomes sort of a refuge for elites. And the centralization versus decentralization is another important axis, because does the original Bitcoin ethos hold, or does it become completely financialized and really is a centralized game for institutions? So there's all these different aspects that need thinking and in consideration. But that's something that I'm just starting to do right now, and I don't know if other people are also thinking along the same lines or not.
I love that. Yeah, I definitely want to, like, if you're maybe like 1 year further down the road, we could do a second podcast. I think that's super interesting. Like I'm just sitting here and like being so impressed with like your thoughts and where you're going with that, because I think it's really interesting to listen to, and I definitely want to do a second round on that.
that would be great. The other thing that I think that people don't understand is, you get a lot of the mathematicians that are in the space will also say this, is that humans don't understand exponential or hyperbolic growth or decline. And for anyone that watched real time, so during my trading days, I dabbled around with the shit coins as well. I went completely Bitcoin after the Luna crash, but I watched the Luna crash in real time. And over the space of, I did a screenshot of it, and it was like over the space of 2 days, it lost 13 million% in value. And like that was the only time I've ever seen anything like exhibit well, in that case it was logarithmic. It was because it was on the decline. But it's the logarithmic death of Luna was just like it was just like you would see it go like if you were looking at 1 minute candles, it was going up and down like 100% in 1 minute candles. It was just complete chaos. And that's something that nobody can fathom. I don't think our human brains can, like, we can fathom it mathematically, but I don't think experientially we really understand. And I think, like, looking to people like Samson Mao that talk about the the huge candle to the upside. I think it's in the realm of possibility. And so when I look, the price modeling that I'm doing right now, my broad findings are demand drives price over the next few years, supply drives price after that. That's how I would summarize my modeling. And if the modeling is wrong, well, so be it. I'm quite happy with that. But if we get into supply shock territory, I think we definitely see price moves both up and down that just dwarf anything that we've seen before. One of the things that a lot of the power law people will say is that we should expect diminishing returns and sort of increased stabilization. Now, maybe the derivatives market helped give us stabilization over time, but from an economics perspective, and in the working paper that we have out right now, Bitcoin has a vertical supply curve, and it's coming up and intersecting this demand curve that's really in the steepest part of the curve. To me, from an economic first principles perspective, what that says is that we're going into, as supply becomes more scarce, we're increasingly going into a more volatile region of like price discovery, not a less volatile one. So right now, I personally, I don't believe that we're going into like a era of diminishing returns and more price stability. I think we're going to go the other direction.
I think so too. I have a hard time believing that diminishing returns are real.
Yeah,
I can see a Godzilla candle or something like that, a God candle or Samson Mao. I will have him on again very soon, the first time on my channel. I think like in a month or something like that. It will be fun to talk with him about that. Yeah. I think he's the hyperbull of the hyperbulls.
Well, it seems like everybody tries to outdo each other, though.
Yeah, that's true. Yep. What are your price predictions?
I would say I don't do price predictions per se, but I think of everything in terms of expected value. And I think that absolutely, if you're looking on a 3 to 5 year time horizon, say, that your expected value should be including $5 and $10 million options for Bitcoin. And
wow.
I would put, like, say you put like 0.5% or 1% on a 10 million value. That adds a lot to your EV. Same with 5 million. I mean, Greg Foss went on about this for years with this for a 2 million price prediction, even if it was a low probability. So I think for me, the proper way to think about it is, for for an investor to think about, well, what are the probabilities? Is there a probability of Bitcoin going to zero? Most people will say yes, just to be polite, like, or, just to, okay, anything's possible. But, is that like, is there really a non-zero probability of going to zero? And I don't know if that's the case anymore. I mean, I could see, maybe calling a bear case, maybe you put a probability in 50,000, 100,000, 250, 500, a million, 5 million, 10 million, and sort of divide up your personal probabilities. One of the things with expected value is it's a personal thing too, because expected value is all about risk perceptions, and everybody has different risk perceptions based on their information and their beliefs. And yeah, all I'll say is that personally, I would be like, if I think in terms of expected values, I'm definitely factoring in $5 million right now. And I would put, like, just as a ballpark, I haven't done it formally for myself, but I would sort of think maybe if I was doing an allocation, I'd say maybe 5% like to 5 million, 15% to a million or something like that. So 20% to a million or above. And so, yeah, that bumps up the expected value calculation.
Yeah, and it's also interesting to think about, like, what is more likely, a $10 million price or like a $0 price.
Oh, I know which side of the argument I'm on that one.
It's like, how could it go to zero? And I'm like, no, like, it really hard. There has to be some huge black swan that nobody knows of, like an alien civilization coming down and have better money or something like that.
Yeah. I think to go to zero, I mean, society would be pretty much obliterated anyway. So one way or another. And even if it was like, well, I mean, no, seriously. I mean, if Bitcoin goes to zero, what why, why would that be? And again, I if I think of it, this is totally off the top of my head, but I'm an economist. I think of the world in terms of supply and demand. What does that imply? There's zero demand for Bitcoin, even if the world, even if there was a nuclear conflict, there's going to be demand for Bitcoin. I don't see it going to zero. And the supply, what happens if Satoshi coins, like, somehow, Satoshi was alive and decided to sell all his Bitcoin at some time? That's still a finite supply. It would have a tremendous impact on the demand side as well, but that would be a temporary shock. So I don't see that putting Bitcoin down to zero either.
Yeah, even like Satoshi's coins moving, I think that would be actually a positive thing long term. Short and medium term, it could go crash the Bitcoin price quite well and hamper maybe adoption. But it's kind of like this thing of where people are still like, oh, what if the Satoshi move coin? If the Satoshi's coins move? And once we get it out of the way, because Bitcoin will survive this, then it's like no longer an argument. And so, like, I think it would make Bitcoin long term even stronger if those coins finally move. But I actually think the key to those coins is thrown away. Whoever Satoshi is, I think those are probably, and that's just speculation from my side, probably never move.
Well, I guess unless the whole quantum computing thing, unless they became vulnerable at some time in the future for that. But I mean, that's pretty speculative.
True, that's true, yeah. But yeah, then really cool. Unfortunately, we're coming to the close. It was really an interesting podcast episode today. I've a question that I asked each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
Besides Bitcoin? Oh, man. Well, I guess one thing would be, I discovered that sort of philosophically, I'm a Buddhist. And so that was through a trip to Tibet, like in 2010. And one of the things that I learned there that I think is really important is that, striving, and like, it's, Yeah, everybody has aspirations, and whether this is Bitcoin price aspirations or wealth aspirations. And one of the things that I learned was that you should really maybe try to relinquish what your aspirations are a lot of times, and that helps to focus more in the moment. Although that's like a super high time preference, like focusing in the moment. I haven't reconciled those two views totally yet, because focusing only in the moment is something that is in some ways a luxury. But I think putting too much aspiration and thinking that somehow that if you hit a goal of having so much wealth, or having a goal of so much Bitcoin hitting so high of a price, that isn't necessarily going to make your life any better when it happens. That you need to really focus on making your life better wherever you are, whatever situation you're in, and at the current moment.
That's very true. And I love that. It's like that, being focused long term, but being still present in the moment. That kind of like balance there. I think that's not necessarily speaks against each other. Like those can coincide with like being present in the moment, focus on what's there, and being happy here, but still being like kind of focus on what's going on for the long term vision.
Yeah, and like in that space, there's this whole the idea that attractiveness or attachment is the enemy, but at the same time also aversion is the enemy. So just as you shouldn't be like super attached to a point of view or a perspective or to a thing, you also shouldn't be aversive, or you shouldn't like think negatively at things that and maybe open yourself up to more experiences that way.
Absolutely. Perfect. And we have an intro in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the question for you from the previous guest is, how can we drive more Bitcoin adoption in Africa?
That's a perfect question, actually. I think driving. I mean, there's so much going on in Africa right now. I mean, there's the technical development, but having worked in the landfill mining space before in the North American study, I would love to see how more renewable energy and waste energy use in Africa can really facilitate the rural electrification initiatives that are going on there, and really expand that. When I was doing the paper write up for the nodal study for our landfill study, I had to look around through a lot of the international literature about what sort of waste was available in Africa, and even the urban landfills have this tremendous amount of urban like waste energy available. And I don't remember the numbers offhand, but I think like something like the landfills in Africa could basically power the Bitcoin network, if I remember correctly. Grain of salt on that. I'd have to look back at the exact figures, but it's huge amounts of energy that are being wasted right now that could go towards economic development and contribute greatly that way.
Absolutely, and the empowerment for African people, it's massive what Bitcoin can do. Thank you so much, Murray, for being on my podcast. This was amazing.
Thanks so much for having me.
Before I let you go, where can people find you, ask your questions, and get to know you?
So I don't have much of a presence on X, but it's Dr. Murray Rudd on X. So you can also look up Satoshi Action, and every once in a while I'll be on one of their posts. I have my blog site is murrayrudd.pro, so that's an easy one. And Google Scholar also for anyone that's into academics. So I'm on Google Scholar. All you have to do is Google Scholar me, and you'll pull up all the publications, and you can see what has been done in Bitcoin, what I've been working on in Bitcoin over the past 2 years.
Perfect. Thank you so much, Murray, for being on. Also, thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.